Welcome to our weekend market analysis. This analysis is for weekend of January 24, 2026. I hope everyone is staying safe for most of the country. It is, especially south and east, it's going to be a very cold, snowy, stormy climate. So I hope everybody's staying safe. Um, it's going to be a busy, busy week in many fronts. So I hope you will be you'll be staying ahead of the news, and you got to be really on your toes this week. First of all, well, Wednesday we have our FOMC, the interest rate decision by the central bank. There is no expectation that there's going to be any rate changes. So, but it's all about the conference and what the Fed chairman is going to say. We also have the December's producers price index, the PPI, coming up on Friday for the inflation. Last week was very eventful with the Greenland story, and of course, we have Iran from the geopolitics. And I can just give you a heads up. I believe something major is going to happen by end of this coming week. So be aware of that, and hopefully it will be all good. Unfortunately, it's been a very rough month in Iran in past months. So because of Greenland, there was question of tariffs, no tariffs. The markets have moved erratically, so be aware of also that. We also had the personal consumption expenditure last week. The numbers came in line, but we also had our quarter 3 GDP. We will go over that, how the markets reacted, and that's what we want to hear from the Fed chair, what his thoughts are. This coming week, big week on the earnings. We got a big number for members of the Magnificent Seven. So be aware it's going to be happening from Microsoft and Meta to Apple and Tesla. So we will go over that in the trade of the week. Also last week, a major event happened, which was a non-event, but it is important to understand is the Japan's interest rates and how it's affecting the world bonds and the movement of money. We are focusing on the geopolitics, but I think you should pay attention to Japanese interest rates. Another event coming up this Monday. As you know, we have this 0 day to expiration on S&P and some very, very few major indices and the futures. We have it on NASDAQ and gold, but it is the SEC has adopted and approved this Monday, and I will go over that. I hope you had your gold trade, and the timing of putting your trade plays a role. Um, and I will also review a trade we did on the gold and the trade of the week. As always, I like to start. This is our Saturday's Bitcoin analysis or cryptocurrencies actually, and where do they stand in different cryptocurrencies, and then again their market cap, as you can see what has happened. So, well, Monday we have again all Magnificent Seven stocks were approved for 0 day trading. They will be on Monday and Wednesday. Of course, we had the weekly, which was on Friday. Uh, we've had in many issues, but this one will be specifically coming up for Monday and Wednesday. So please, I put this in here because we focus so much on equities, just what the stocks are doing. Options market play a huge role as far as the liquidity and other things, and volatility and effects on the futures market. So please pay attention. We talk about gamma squeeze. So it is going to be adding more, again, volatility in some ways, but also it allows you to have even more shorter term trades if you like to. So we have the Magnificent Seven approved, and There are some rules, they looking at the market cap should be over 700 billion. The monthly option volume should be over 10 million contracts and with a limit of at least 250,000. So that's how they use it. And this list will be reviewed quarterly. On top of that, we got the IBIT, which is the Shares Bitcoin Trust, plus the Broadcom. So just a heads up. Now, as far as economy, as I mentioned, the Japan's 10-year bonds, the rates were unchanged for the short-term rate, but I want to pay attention where we had been, which is really, it was like zero point 0.2 to 0 to zero point 0.2, even we did go to negative, and we are at 2.26 as of Friday. What does that mean? This is the largest we've had in over 30 plus years. And what that means is competition for the US Treasuries. So there is a movement of money, and the carry trade is, we've talked about that before. That's going in the back burner. There is a movement. There is going to be sector rotations. There's going to be actually asset rotations. We see what's happening with the interest rates in the United States and also what we see the movement to the precious metals. But this is a big caveat. So you want to pay attention what is happening in Japan. They actually have inflation now. They've been wanting to produce that. But even from the just in the past year, we went from a 1.25 or so all the way to 2.26. Okay. As I mentioned last week, we had also our GDP for the third quarter. It came at 4.4, a little better than expected, 4.3. And we had a 3.8% in second quarter. And it came mainly from consumer spending, exports, a little bit from government spending and investments. So that's that's important to realize. And also, what we had was consumer spending was revised slightly lower because of gains in both goods and services. So, the other thing was we had the PCE numbers came. It was at 2.8, and the core PCE, which excludes food and energy, was at 2.9, which was unchanged from the initial report. Going back to the GDP, you can see based on past 2 years, almost 3 years, what has happened on a quarter per quarter. You had an anomaly quarter one with the old, again, we talked about tariffs and other things. So you can see how the markets or how the GDP has moved. As far as this coming week, as I mentioned, we have the FOMC statement. This is 1 Central, 11 Pacific, and 2 p.m. East Coast time. This is what I would pay attention, the FOMC press conference. But we also have the Bank of Canada monetary policy report, and their rates will be coming up. The rates at 2.25%. And we see most expect that the rates in the United States will be unchanged at 3.75. Also, as I mentioned, we have the core PPI and PPI coming up on Friday, which is at 5:30 West Coast time and 7:30 Central time. So please be prepared. I share these with you so you could have a little map for the week to expect the times that you want to be in a trade if you're day trading or what to expect. As far as the yields, again, you see the yields have gone up a little bit in the United States. And then what was a month ago, we are a little bit ahead of exactly a month ago. And as I mentioned, please watch this Japanese bonds and notes. So what a week we had. It's been, oh, roller coaster. It had a big drop and a big up. We'll see from the charts. The Dow was down 0.5%, Nasdaq pretty flat, and S&P is almost flat, 0.35%. Gold, another big move. We are right around 5,000. Who would have thought that we would get here so fast? We are at 49.80. Silver, big move. You will see, 100. So gold, copper up 1.56%, and crude oil 2.91%. Again, let's be watchful of those geopolitics around the globe, especially in the Middle East. What's going to happen? We are 1% below the 50, well, it's the year-to-date high, but this was all-time high as well on January 12th. And the same thing on S&P. We are about, again, less than 1%. The same thing NASDAQ. So we hit all-time highs on January 12th, and since then we are within 1% of those highs. The overall markets were down 0.4%. And we see again, like the small caps have been better performers than the large caps. When we look at again the indices, we see well, we are above the 50-day moving average. We notice what happened on Monday. Remember, on Tuesday, remember Monday was a holiday, United States. Big drop, double drop because the futures market opened on Sunday. Big drop on Tuesday, bounced back, all the again the NATO talk and Greenland talk, tariffs. So it kind of negated itself, and that's why we ended up. It looks like a non-event. I mean, when S&P is up 0.35%, you say, well, what kind of a week was it? But this is the week we had. Went all the way below 50-day, below 20-day, right on the 20-day. The same thing in NASDAQ. Russell has been the big winner since bouncing off that 50-day moving average, double bottom, big hero. Now we are looking at this. It was this doji and looks like an evening star. So let's watch this. The sell-off on Friday and you see if there's a follow through, then we will go to the 20-day moving average. But it is an important week coming up. The same thing in Wilshire 5000, bounced off his 50-day moving average. The yields, big move from the yields. As I mentioned last week, we had the Japan's interest rate decision, and we've had this big move. We see the dollar, big drop, and money has been moving to the commodities. Money has been moving again, the Japanese bonds and notes. And also, we are looking at the commodities such as gold on fire, silver. It's been amazing move in silver, and also crude oil had a nice move on Friday. And then VIX, with all that what's going on, you can see everywhere. So again, it was a non-event in a sense of no movement in the indices, but there has been a lot of movement up and down. As far as our sectors, what we see based on this is on relative strength for the last 2 months. We see that basic material, when you think about precious metals and mining, has been the big winner. But also last week, I mentioned about the staples and consumer defensive coming from, I mentioned Walmart and Costco's and Home Depot's and Procter Gamble's. And we continue that strength, although we consolidated, but Friday was a big day. Energy has been big mover. One part of it, think about Venezuela, think about companies like Exxon and Chevron, how they get affected, the opportunities. So basically, energy stocks have done very well. And then industrials also, it was a flat week, but they had a nice move above their 50 and 20. Then we come to the discretionaries. As you can see, big drop on Tuesday after the tariffs. Of course, tariffs affect these companies. We think about Amazons of the world, and they dropped to the 50-day right there, stopped and bounced back. Healthcare been really all over, went to the 50 and bounced back. And then the real estate, the similar thing, what happened with the rates, the opposite, but bounced off this 20-day. Communication, you want to pay attention to this. Companies like Verizon and AT&T and T-Mobile. So they had a big drop and then they bounced back. And then, of course, S&P and then technology really has been consolidating for last 3 or 4 weeks. So we'll see. We have gone really nowhere, flat moving averages. Utilities, they've been on the down spiral, and financials big time. After the earnings, they've had the sell-off, and now we have broken below the 50-day moving average. We go internationally, South Korea continues the strength. There's again for the third week, they're the big winners. We also have Mexico now, then Brazil, and we look at Belgium and Taiwan, big moves, and then Malaysia. Again, from the relative strength point of view, past 2 months, India continues. There's a lot is happening. Again, we talk about tariffs, the geopolitical, and then they've been a sell-off, and China, and we also see France. So, but these two are the ones that we are seeing big moves. As far as the sentiment goes, the AAI sentiment last week, we remember we talked about 49.5. This week, we've had a little bit of, again, a correction in some ways of the bulls, and that came from mainly the bulls moved to the bears corner. Remember, this was on Wednesday. This was Monday's tariff news came, so sometimes you have to remember the date that these surveys done. So we are right about average on the bears, above average in the bulls. As far as fear and greed, we are back. We are in the neutral zone, similar to what is happening with AAI. But from the technical point of view, now we are back to 67.7% of the stocks are above their moving averages, which is that's bullish. As far as the market itself, though, I'm looking at this. This is again basically it's a Fibonacci extension. It goes back to the past year and from the high in the February to low of April. We see this consolidation. Again, I call this gamma squeeze. There is this coiling is going on and it has to go one way or another. I mentioned about 7,000 being magic number. So we are hugging this 138.2%. So you can visually see since November, really not much. We've stayed in a pretty much a zone. So after a little sell-off in November, we have been going back to the support above. So we like to look at the short-term moving averages, and we see the 8-day and 21-day exponential. They're right there flat. And then we did go on Tuesday, went below the 50-day, bounced back immediately. Again, that's what I talk about, the two-bar confirmation. So we want to make sure that if you want to put a intermediate, a swing trade, you want to have those confirmations. So you see this flat, again, important week, I think, in my opinion. As far as the Bollinger Bands, we went outside, came back inside, hugging that 18-day moving average. Our stochastics have turned positive, but MACD is still negative. And then on a weekly basis, we are embedded. So on a weekly basis, we are sitting right above the 18-week moving average. The bands are narrowing. I mentioned about coiling, and I'm talking about, again, the squeeze about to happen. But MACD is pretty flat. When we look at NASDAQ, similar thing, except in NASDAQ, we did go below the 100-day, came back up, and we are right around 18-day moving average. As far as the Russell has been a big winner, but as I mentioned, let's watch that Friday sell-off. Although we still embedded, so we are not overbought and MACD is positive. So we are not there yet. Sometimes what happens, maybe there's some profit taking. The market, there's no shorting at this time. They would like to go after touching the upper edge. They like to go to the next support, which is the moving average. In this case, is 18-day, and then maybe bounce back. But we're still embedded. MACD is positive, but the bands are pretty wide. As far as on a weekly basis, that's the reason we have been out of we did go outside the Bollinger Band again, and we are overbought. MACD is flat to positive, so that's what on a weekly basis. The Dow has come back above its 18-day, and then Friday just about right on the 18-day. We are not overbought, so momentum is positive, but MACD is negative. So when you get the contradictions like that, that's more of a neutral and hold. So we do not take a position at this moment till you want to go to a shorter term time frame. And then transportation sitting right on its 18-day moving average. MACD just turned negative a few days ago, and but we are overbought also in stochastics. And then VIX is sitting right on its 18-day moving average. Look what happened on Tuesday. Boom, outside. And every time we've gone outside, if you recall, generally when we go outside Bollinger Band, next day we come back, and that's what we did. And now we are oversold, and MACD is positive. When we look at it on a weekly basis, we see how we hit the upper edge of expected move. But we are embedded on a weekly basis. MACD is negative. When we look at VVIX, which I put more emphasis, again, Tuesday, way outside, came back, but we are above the 100 days. So anytime we are above 100 points and also 100 day, that shows us that there is interest in VIX itself. And MACD is positive, although the stochastics is momentum is negative. And then on a weekly basis, as you can see, we did go hit the upper edge and came back in. And you see how we have been rejected on the upper edge every time. And we are in a 100-week. But we are oversold, and MACD is about to cross to positive. The yields went way outside again, and we came back in. Tariff news, and boom, come back. We are corrected ourselves from the overbought position. MACD is positive. The weekly, one of the reasons we went and got rejected is that 100-week moving average. So that's good news as far as trying to see if we get rejected, that would be lower yields. But there's a lot of other events going on. So what is happening at the 10-year opposite? We went outside the Bollinger Band, came back inside. We are oversold, but MACD is negative. On a weekly basis, one of the reasons we found the support is that 100-week moving average and oversold, but MACD negative. When we look at the 30-year bonds, we see that we have resistance against the 18-day moving average, and we are getting neutral in stochastics, and it's about to cross on the MACD. But on a weekly, though, we are still below the 118-week moving average, but we are oversold. MACD is negative. And then the dollar, big move. And I've mentioned about this 100 zone. We have broken below the 100-week big time, but we are oversold. MACD cross, so we want to watch this. And it goes back again. Please follow the Japanese yields. And then euro is the opposite. Again, the tariff news, and what happened was this big jump, and now we are outside Bollinger Band. So we want to, at least in the short term, we want to see what will happen here. Although MACD just went positive, but we are overbought. So we need 2 more days on the stochastics to see if we're going to be embedded. Gold, what a move. Bollinger Bands are opening. We got a railroad track, 1, 2, 3, 4, and we have come very close to that 5,000 magic, 49.91. But we are embedded. MACD is positive. Bollinger Bands are reopening. And then on a weekly, we did go outside the Bollinger Bands, but we are embedded. MACD is positive, so the money's still coming in. And there's, again, this rotation of the money, and silver has been on fire. We are over $100. It's at 103, and embedded. MACD is positive. I've been talking about this MACD since here. So big move on a weekly. Finally, we came inside, and again, 1, 2, 3 weeks in a row, we are outside Bollinger Band, wide bands, huge volatility. Talked about the options on it. So much money is coming in. Again, a gamma squeeze on silver, and we are embedded on a weekly. Copper also, after a little correction for the last couple of weeks, we came back, and last week after the correction, we came back and closed above the 18-day. We are neutral to negative right now, and MACD is negative. So we want to watch that. Bollinger Bands are coming together. Platinum, what can I say? This is from the first of the year on a I mean, not first of the year, from the beginning of the last year to now on a monthly. Huge move. I mean, how can you go from $80 to you're looking at $250 or so, 53. Magnificent move. And we still have positions there. And then Bitcoin, I mentioned to you, we gotta be careful as far as we got to clear that 95 and have a continuation. We had done a little bit, came back inside the Bollinger. Now we are back to under 18 days, although we are oversold, MACD is negative. So we want to look at the weekly, and I had talked about this 100-week moving average. We have not been able to clear that. We did go outside last week and we got rejected. We are oversold. MACD is still negative, and now watch this 18 week is about to cross the 100. So we'll see what will happen. Again, you have to remember cryptocurrencies, bitcoins are not like gold. They are not safe haven. So, sometimes you think the money rotation automatically will go to gold, or when there's a weakness in dollar, it happens. Well, obviously, you see the money has been going to the precious metals. When I look at the Fibonacci, you see this 78.6 has been attraction pivot point. So we'll see it in the magnet. We did go to that 61.8% and got rejected. We didn't even go to ambush zone. So also crude oil, again, geopolitics, we are watching that. We had last few weeks ago, we had a Venezuelan news, and then now we have Iran news. So we'll see. We are sitting above the 100-day, but we are overbought, although MACD is positive. Well, there's almost half a country is under snow and cold spell, and this is like the vortex again with the cold, and you see how immediately what happens. Look at what happened to natural gas, almost doubled way outside. It's Bollinger Band, but just be careful. Although we have strength in MACD, you see these big moves, we are way outside. So once the cold spell goes away, so we will need to normalize and come back to the mean. So we are overbought at this time. On a weekly basis, on the other hand, you see that we were oversold and we shook that off. But we are on a weekly basis outside the Bollinger Band. So be careful with that. As far as the also wheat, I just thought this was interesting how big of a move we had in wheat. We did break above that 100-day moving average. We need a follow through. So if you're playing wheat, MACD has been positive, and our stochastics has been positive. So let's see if you have a follow through, but we are outside the Bollinger Band. All right, let's talk about expected move. And we see again, it was a non-event when you think about overall uh, flatness. But you see how Tuesday we went outside the expected move, the lower edge, and came back inside and finished a little negative. The same thing happened in NASDAQ. The same thing uh, happened the opposite way on Russell. Russell had a nice bounce of the lower edge, did go outside, hit the all-time high, and got rejected on Friday. So basically neutral. The Dow began like S&P went outside, came back inside. And we also saw that in bonds. The 20-year went outside, finished flat. And then on the other hand, we see gold way outside, huge, and hit all-time high in gold, ETF and gold itself. And silver, the same thing, way outside, all-time high. And then we see the financials have been, after hitting all-time high, they've been selling off. The same thing, what happened opposite is in energy, big moves. Again, thank you for these energy stocks. And crude oil, right on the edge of its upper edge of its expected move. And Bitcoin, well, huge movement on Bitcoin. You see big move. It's volatility. So we finished right in the middle after being sell-off on the Bitcoin. I hope that was helpful. We will move on to trade of the week. Thank you so much.